You're watching Mirror 7 News. Stay informed, stay ahead for more news.
U.S. stocks took a sharp downturn this week as a mix of legal rulings, mounting debt concerns, and fresh economic data unsettled investors. The Dow Jones Industrial Average dropped by 249 points, while the S&P 500 slipped 0.7%, and the Nasdaq Composite fell 0.8%. It was a clear sign that Wall Street is uneasy about the direction of the economy, particularly after a court ruling questioned the legality of former President Donald Trump's sweeping tariffs. The ruling raised the possibility that more than $120 billion collected in tariff revenue this year could eventually need to be refunded. While the tariffs remain in place for now, the potential repayment looms large, adding to the financial uncertainty. Investors quickly began to factor in what it would mean for the government to issue more debt at a time when Treasury yields are already climbing. On Tuesday, the yield on the 30-year U.S. bond hit 4.97%, while the 10-year Treasury reached 4.30%. These higher borrowing costs add new stress to a country already carrying $37 trillion in debt. Treasury Secretary Scott Bessent reassured the public that the administration expected the Supreme Court to uphold the tariffs, though backup plans were also being prepared. Meanwhile, Trump announced he would hold an emergency White House meeting to discuss an appeal. Speaking on radio, he insisted that the market's drop was due to fears the tariffs could be blocked permanently, adding that stocks would go right through the roof if his side wins. The timing could hardly be worse for investors. September has historically been the weakest month for markets, and renewed tariff drama is colliding with troubling signs from the broader economy. Fresh data showed the U.S. manufacturing sector has now contracted for 6 straight months. In fact, industry comments gathered by the Institute for Supply Management painted a bleak picture. Trucking executives said conditions were worse than during the 2008 financial crisis, while food and beverage companies warned that costs were poised to rise significantly. A computer industry firm reported that tariffs continue to disrupt planning and scheduling, adding to the strain. Consumers are also showing signs of pressure. McDonald's CEO Chris Kempczynski said the company has been watching what he called a two-tier economy, with lower and middle-income households struggling the most. That stress is reflected in spending patterns, as rising prices and economic uncertainty force families to pull back. Altogether, the day's events underscored just how fragile the balance is between financial markets, government policy, and the global economy. With tariffs hanging in limbo, debt levels climbing, and industries signaling distress, investors have been left with more questions than answers. The coming weeks, particularly as the legal process unfolds, are expected to be volatile as Wall Street braces for whatever comes next. Stay subscribed for more videos.